Hello ladies and gentlemen, this is Bulldozer Investing. It is May 8th, 2021, 1:15 p.m. I will review all the major ETFs and also the FAANG stocks for this week. Let's go ahead and start our analysis. First off, we're going to go with VIX. It seemed like a lot of hype was in. The market was, everybody had that idea of, okay, we're, crashing again, blah, blah, blah. They were kind of right, because we did break above some of the EMAs I'm using on this chart, 21 and 34. However, just this last candle, a huge crash, it's a bearish candle here, but where it landed was a major support line as well for VIX right here, as we can see. So this is like 1, 2, 3, 4, 5, 6. There was a resistance before, broke out, got a support, broke out, now getting a support again. Where I would see at most, now what I usually do look at is the rounding bottom formation at the bottom. So we do kind of see that here. I want to see if this plays out, and it needs to get, so this needs to go in the cloud. That's another factor of VIX, or the market being bearish. Okay, so if we see this kind of action, then your market definitely is going to break down. And let me actually extend this. So as you can see, we could try to cloud again, come back, get a support at the cloud bottom, bounce again to do a recheck, and then just go up. Okay, where the resistance, or where VIX could play out, potentially I have two targets. One would be $22, and the other scenario is, notice why I drew this little here and then pull back, is because we have a major resistance right around this zone right here. Don't worry about the VIX that are pulling up and then coming down, but the body line of these candles and the candles right here are going to be your first resistance, which is, it's going to be $21, or $21, yeah. And then the next resistance will be the cloud top right here, and where it aligns of the major, the next where the wicks are aligning, basically. Let me pull this up a little bit towards a little 23, 24 area. Okay, so that would be VIX. If VIX doesn't hold, of course, this line right here that I drew, basically the cup formation, and the support right here where it basically closed the day for. Let's zoom out and draw some couple more lines here. Your next support line is going to be right here, 1615, and let's get another line right around here, and let's get another line right around here. You see how I'm doing these things? It's like I'm not really doing Fibonacci or anything. I can if I wanted to, and it's probably going to be about the same areas. Wow, the thunder. Okay. So there you go. So 1650s, 1420s, and 12s are going to be your next support line for VIX. Or if you're rooting for, if you're being bullish, you're going to watch out for these levels. If you're being bearish, then you're following this path right here. But a major resistance is going to be 24, 23, 60 area for VIX. Next up on our list is SPY. So let's take a look at SPY. SPY broke above, and this was the last 2 days. I knew it was going to happen, a violent breakout after we got a confirmation from this box. I mean, this is what we drew last week, guys. I didn't touch it. I didn't do anything. Major support. As you can see, we drew this pennant, a bullish one, and then it just broke out. I told you guys I was expecting 426 last video. Nothing has changed. Can we get a pullback? I don't think so. This is gonna rip. Now tax season is coming. I know it's May 15th and so forth. I don't know how that's gonna play out, but another like a run that I could see is, let's do a small ABC right here, or you can say double bottom. It did actually hit its 100% extension, what my target would be is, let's go ahead and pull this out and put it right here. Notice that the width of these boxes are always aligning the same. It's all mathematical, guys, right here. So 426 to 428 area will be my target. What I'm expecting for this week is maybe a small pullback and then go like that. Okay. There you go. Why did I pull back here is to retest the tops right here at 418 and then the top of the candle the previous day or Thursday, let's say. So it could get a retest, and potentially the 61.8 it could get a retest again. Like you could test these areas. Okay. There you go. So that's our target, 426. It has been our target. Again, I'm not a perma bull or perma bear. I only read what I tell you guys what I read off the chart. It works. If it doesn't, I mean, it's not always going to be technical. Sometimes a major breakdown news comes up and it's unexpected. And most of the time, let me tell you one thing, is that the news align with the technicals. 99% of the time. Like I'm expecting something like a crash or something to happen, and then it just happens to align with that technical time expectation. There you go. So we just drew like a ascending wedge, and a lot of bearish people love this, and I didn't draw it because I'm bearish. I'm just drawing it, as you can see the technicals here. One bounce, the second bounce, third. Now this could play out like this. Let's redraw this. It could play out like this. Okay. And there you go. If you have a breakdown off of this ascending wedge, and then you're gonna probably retest these areas right here, 410. Okay. So that is SPY. I know I probably mixed your mind up with so many drawings, so many Fibonacci levels, but I just wanted to explain you, because these technicals, you can't just it's not a kindergarten work. A lot of people make it easier. A lot of people talk as if it is. It is if you have the experience. However, it just doesn't come all of a sudden. So if you're getting frustrated understanding these, how I come up with it, can you draw, like the purpose of the channel is not to teach people from scratch. The purpose of the channel is to show you guys the technicals that I know of, and to tell you guys the price targets depending on what the technicals are telling us. Now if you understand them, that's good. If you don't, keep watching these videos and your eyes will get used to it. Sometimes you can't learn something from scratch, but just by watching you'll pick up. And this is one of the things, the technicals. If you go read what a MACD is and just read it off the book, you're gonna be confused and you're probably never gonna start technicals. Or if you read like Ichimoku and like all the technical namings of it, you have Siku and all these Japanese names and so forth. So you're gonna get confused. Most of it is just try to be simple. The green line is bullish as long as the cloud is green. Your support lines are above the cloud. If you break down the cloud, it's going to be bearish in the long run. So just an example of it would be, this was a quick bounce back, but when you see a breakdown like this, you can jump in and get like a dead cat bounce, but that means it's going to be a long. So when the cloud is this thin, right, it's okay, it'll pull back. But whenever you break down, you just wait, and then whenever you break up, you can go up, you can go in, it's okay. But when you break down and you go in thinking that it's going to be a short, oh, the cloud is green, just wait patiently. You see how the market, this was the Corona crash, but you see how the market can be violent when you break down the cloud and you break above the cloud. You'll always break above and then get a confirmation. This one got a double confirmation, and it's exactly spot on, as you can see. But whenever you do break down the cloud, one way to play this is let it play out. Don't touch it till it breaks above the cloud. Or another way to play out is try to get the bottom of the cloud and buy and try to get a bounce off of it, or the top of the cloud. When it bounces off top of the cloud like this that we mentioned, bounced off twice, 3 times, you see. So you can play those, but whenever you think the market is going to go down, you can play these like cloud tops or cloud bottoms. Don't worry about all the technical points and naming of it, okay? Just making it simple for you guys. Next up is QQQ. Let's take a look at NASDAQ. I think I reviewed this the other day. By the way, the time has come, so for people who have not been following me on Twitter, I mean, I'm not really like telling you guys to go follow me, but just to give you guys an idea of why I'm actually like promoting my Twitter is that every week I put up, every Friday I put up this, and I say like I'm going to review these stocks anyway, so you don't have to request them, and you can go ahead and request any ticker as you like, and I'll go review them on the weekly videos. But on top of that, what's more beneficial is that you're like, I don't care what's being requested, I'm only following the ETFs anyways. I'm actually putting up charts, not every day. I'm not a person that will post like 1,500 charts every day. I just chart whenever I think it's appropriate timing for people to navigate through the market. So I post these things with a little bit of information, of course, of telling you guys what's going on. Like for example, with Apple, I got a lot of calls, and these are my plays, guys. By no means necessary that it's a trading suggestion. I'm just telling you what I'm doing and being clear. So just showing you guys where my mouth is. It's not a lot. It's just these are a lot of plays. I don't play options with big money. Like let's say that I want to buy Apple, and you're gonna put like $30,000 to make like $1,000 or something. So I won't risk that, and I'm like, okay, only thing I'm gonna lose is like $500, $600 if things go wrong, or if it hits my stop limit for the day trading or something. Then I'd rather play options and use that money to average down or do something else. And that's why that's how I play options, and I usually do it with Apple, because I could read Apple chart better than other charts. It's just for me personally. Again, I'm posting things to indicate. You see here that even on Palantir, I know we're not reviewing Palantir yet, but I told you in the previous days, I said that I will average down Palantir around a certain price target, and that price target did come up, and that's where it bounced off. So sometimes it's really helpful. As you can see here, this is the one. Lost the rounding bottom right here, the rounding bottom. Now it has a support here. Now once it broke down, I did say that I will probably average down around a certain price point. So, and that point did come. Okay. I can't find the tweet, but if you follow that was my whole thing. Like if you follow it, you'll be able to get directed within the markets, or see directions within the market. So this was kind of posted on the Twitter chart. So I'm going to go ahead and delete these and just tell you guys how I came up with these things. So obviously you would know a trend line. That's one thing. Okay. We could see that every time it bounces off of this trend line, it does go up into a next run. We can definitely see right here that there's this was the previous top, so now it's going to be a resistance. Now it was a support at one point, lost it, coming back, so it's going to be a resistance. So that's another thing. Now what we want to look at is how I came up with these Fibonacci lines, right? So we got from the previous support line defense to the top, previous top, and the current support off of this trend. When we draw that, we can see that you're going to have this zone right here, 347 to 343. That's where we're running up to. Okay. The bigger Fibonacci's are coming way off of like certain elements, so I can actually delete these because they're like from previous phases or technical video analysis that we might have done. So I'm going to go ahead and try to find this Fibonacci. Yeah. So then we're drawing a support level Fibonacci. So we have the top. Okay. This top is February 21 from this year's pullback to the major bottom of it, and then after that we pick the top. Okay. So that's going to give your support levels, and the support level is that it's 322 and 377. So you have major two things going on here. One is the support levels from this top, February 16, 2021 till the low March 5th, okay? And then picked up again broke the all-time high at around April 16, exactly 2 months apart, and then a pullback. So what I did is the bottom will be the bottom of March 5th, the top will be April 16th, and I just drew another extension. So we can do that right here. Let's go ahead and do that. I just drew another extension off of the 4th of May. Okay, and let's go ahead and box this up, and we can see the major support and major resistance. Okay, there you go. So my target 349, so let's say 350 to 354, and then the support will be 322 to 317. Now that's how we come up with the boxes and the width, right? Now the next line is this. Next thing we're gonna do is this. We're gonna go ahead and show you guys the little width, the extension that I did, right? So how did I come up with the arrows? They're pretty simple, they're not complicated. Just wanted to show you one thing is, if I can find where I think it was right here. Where is it? Just lost where I had the I don't do the Elliott wave. I'm not an Elliott wave theory guy. Like I'm not really familiar with, but I just literally had that little arrow path drawing. There you go. So this is what I wanted to tell you. Now a lot of the times I always recognize the W pattern. That's my that's how I trade. Okay. One good thing about W pattern is that if you do follow up one, okay. Now this is a W, okay, right here, as you can see. Now usually what I like, the formation would be that you see the bottom here and the bottom here. The second bottom is higher than what we call a higher low. Okay, that's a bullish pattern. Now here, this is flagging. Okay, and how do I know the next up where it would go? Okay, and what is the time frame for it? Okay, so this is the flag part, and it bounced off of the trend, which is good, the previous bottoms, that is good. But now we want to look at, what we want to look at is, we want to see where we can go from here now. That's the major question. Now let's go ahead and do that with two things. Okay, and I'm using TradingView. It's a free tool. I do use Toss, Think, or Swim, but I mean, you might have an account, a TD Trade account or not, TD Ameritrade account or not. So TradingView, everybody has an account. It's obvious, so we can all work from there. Now let's go ahead and I want to pull out, and time to time, because I don't use this a lot, I do forget where the technical drawings are. So let's first get the date range, okay, the width. So the date range from, if you want to pick it up from here, or I like to pick it up from here, and right around, I think this is fine. Okay, so this is the width. Okay, so the wave up right here from the flag bottom, I'm looking at, so we can fix the arrow, so I'm looking at around June 8th. So the first week of June, we might hit the 354 levels. Okay, that's one thing. Or you can say, well, you could do it from here. That's June 10th. So 2 days is okay, right? We can't be spot on every day for every technical drawing. The next thing we want to do is, we got the width. Now we need the height. Okay, the height is going to be the price range from here to here. Now some people might say, why don't you just pick it up from all the way from the bottom to the top? You could do that too. That's fine. But I always like to be conservative. Okay. Now let's go ahead and put it again, the flag bottom right here. So what we're gonna do is, we're just gonna, oh, I did play around with the width by accident, so I'm gonna fix that really quick. So I'm just gonna fix the length to match the width, and let me see if the length is actually also not tampered with, which is by a little. There you go. And we're just gonna go ahead and align it right here. Okay. So we're looking at a 10% move, and that's a lot. Okay, some people might not agree with me. Is what we're looking for is a 10% move, and actually it's not even a, let me go ahead and do this right here. Okay. Now if I were to take the bottom, most likely this is going to meet the 100%. If I take the bottom here, yep, it will touch 100% line, okay, and it would be about 371 by end of June. Now that's very bullish target, by the way. Okay, what I do think would happen is, let's redraw this. So we got the W, then the flag. We're mostly going to retest the all-time high, get a support from here, touch 50, pull back a little, touch 61, pull back, and then slowly go up here. Now the time frame is definitely a little bit on the shorter side. About it says it gives us about nearly a whole 2 months actually. So within the next 2 months, 371 would be my target. But for now, my short-term target is going to be 350. Okay, so that's how I can come up with these. Now you might agree with me, you might not. This is just a basic technical configuration that I go with, and it's not going to be always 100% right all the time. And none of the technical chartists are. But how are you going to base off your technical? What are you going to base off your technical or any kind of stock analysis, right? How do you do it? It's either going to be technical analysis or it's either going to be fundamental analysis. With fundamentals, you're not going to be able to estimate, like it'll just say like one year price target. Okay, so if you're doing swing trading, you have to hit some technicals and align with fundamentals. So this is what I expect off of QQQ. Okay. I know it's been a long review just for QQQ, but I just wanted to show you how I came up with those targets. Okay. We're gonna speed things up a little, so I'm gonna go ahead and review Dow. I've told you guys many times in all of the reviews that Dow is definitely looking more bullish than any of the other stock indexes. Okay, so that being said, we need to also make sure that we're not being too bullish. Whenever I'm too bullish, I step back a second. I say, okay, let's go ahead and give it a rest. Let's just see what's going on here. Obviously, the top trend line, if we pull back, that's where it is, 336. Okay. Now, are we going to pull back? What are the Fibonacci saying? Let's go ahead and do the last cloud bounce, the top and the bottom. And it looks like we did hit the 100% extension. You see how perfectly this is aligned? Look at the support and the 61.8 extension. Zooming out a bit, okay? Zooming in a bit, okay? Look at this. And look at the top. This tells me that, again, I don't want to... I hate being bearish. One thing is because people who are bearish actually never short the market. Honestly, they would be bankrupt by now. All those people that you see like, oh, market is going to crash, blah, blah, blah. If they have shorted everything or every time they said market is bearish, they would be bankrupt. When I'm bearish, I usually either sell covered calls or average down. Or wait for a price, like I declare a price target and say this is where I'm averaging down. But some people are just ignorant and they're like, okay, market is bearish. Well, tell them that, market is not always like bearish. You'll have some indicators at some times and it'll just be a short period of time. Now, if there's a bearish market like it was in the second Bush era, like the 2001 to 2003, I can show you that in Dow. Let's take a look at all and do monthly. So this is after the 99 tech crash or bubble, you might want to say, whatever, the 2000. So this is a bearish market. The whole, look at this, from 2000 to 2003. Okay. And then after 2003, we go on a bullish run till 2007, and then your mortgage crisis happened, and then you go back down way low. It's even lower than the 99 or 98, the September, the August crash of 98, or pullback, but it was a large candle on that month. And then we get the 2002 lows, and it even breaks down below that. That's very scary. And then it goes on a rip. It goes from 2009 until the Corona crash. Now, we did have some major drawdowns on the 2015 twice, and then we had the drawdown of December 18th, the Christmas Eve massacre on the stock market, of course, and then we had the Corona, and we're just ripping up, and it's kind of scary. And that's why people like draw these, the bearish scenarios. And the older traders, the people who've been playing the market, are always measuring things off of Dow, because when we talked about market back in the days, not that I'm like 70 years old or anything, but besides from that, when we talked about the market, it was Dow. Whenever we talked about the market, it was always Dow index. Okay. So there you go. These are like major, like monthly. This is monthly candles, and you can see like how powerful these moves are, but the width of the candles aren't as like powerful as the one off of the recovery. So something like this, we can do a melt up. Okay. I just think that if Dow pulls back, it could, like a major pullback would be 312. That's going to be a heavy support right here. Okay. If a major crash happens, then we're looking at 220s. That would be a crash. So a lot of people, the fear mongering and everything. I just want to show you like how the zoomed out 1 monthly chart would look like, and where these like long, sometimes you see like very, very extended lines, and you're like, where is this coming from? It's because I probably did like a major zoom out and monthly candles. Okay. So this is about it. Like Dow, we basically reached 100% extension, and I am looking for a small pullback on Dow, most likely 344. If a major drawdown happens, 341 for the next week. I don't think we'll hit 341, but maybe 344. Because the 100 extension looks like it got stuff there. That's what happened. Okay. Next up on our list is IWM, Russell. Let's take a look at Russell. Russell chart is pretty much drawn for us, and look at where we drew the resistance line, and look where it basically went and just stopped. Went a little bit above, but came back down a little. What do I think about? Now we're gonna have some earnings, and we did have earnings this week. Earnings were great. Nothing really happened. Now a lot of people are gonna say it's baked in. I don't believe in that baked in stuff. Market goes up because of liquidity. Market goes down because of lack of liquidity. It has nothing to do with earnings or baked in. Okay. Doesn't matter how bloated the market is. If you have liquidity, where are you going to put it? You're going to buy gold? You're going to buy gold? Institutions are just going to buy gold? Stock market is where you can actually invest in this type of environment, where you have inflation. Doesn't matter. I don't believe any government, any world's government, it's not just America, I don't believe any government with their inflation numbers. When I go to Costco, the pound for meat was $8.99, $9.99, depending on the quality you're getting. Now it's $11.99, $12.99. You go anywhere, you buy something, there's at least 15-20%. Now a lot of people are going to say, especially lumber, 300% since last September or something. You want to buy plywood? Go check out the prices. Okay. We have shortage of materials. Things are going way above the price where it should be. And I mean, of course, there is liquidity. There is enough money being printed. It's just that we're not fully recovered, where people are not coming back to work. That's usually the case. And then also shortage of material, chips, lumber, anything you can imagine, like anything. Okay. So in this environment, what are you going to invest in? Gold or stock market is your choice, but a lot of institutions are going to put the money in stock market. If we do pull back 221, if we break this, the red line that I drew from previous week, we're going to probably head back up to 234 levels. Okay. And look at this. Look at these waves. 1, 2, 3, 4. The next wave is going up here. Okay. So this in fact is a very clear indication. Okay. There we go. All right, that's your Russell. It's very basic and clear after you see the chart. Okay, I don't even have to tell you where it's going to go. This is it. Now, if it breaks down this channel, then your market, your small caps, has already had pulled back more than 50%. But it's going to be a major crash for those stocks. So just be careful and make sure that you're in this range. Okay. Next up on our list is Apple. I'm going to do FAANG stocks. So I'm not going to go in the order of FAANG, but just alphabetical. I did mention that the other day. I am bullish on Apple, and reason why. First of all, remember last week I said that we might get a pullback, we might retest the cloud. My idea was that it did test the cloud and bounce back, but it pulled back a lot more. But it did, remember I said any deep down drawback will be around 127 to 125. It came right in that. So I just basically drew an extension. Where is this extension coming from? Oh, the pullback, right? Yeah. So I just basically drew another extension to the above. 137 is going to be my target, and it's probably going to try to pick up and go there from the last week's high of April 29th. So let's take a look at April 29th. Was Thursday. So it's been a week. And in a week, it went from 137 to 127. That's a $10 range. I think within the next week of 14th, it's going to go back up there. Now, I did buy some calls, lottos that I showed you. Not much. Like value-wise, I mean, I'm not buying like $5,000, $6,000 calls or anything. They're usually $100, $200, $300, sometimes up to $1,000. But I always start small, like $200, $100. Okay. It's because I'm more invested in stocks. I only play options to leverage or just taking advantage of it. Like I don't have like 50,000 left to put on Apple to play this bounce, so I'll just put 1,000, and from that 10, you're looking at, so you're looking at $50,000 divided by, let's say 130. Let's say we got Apple at 130. So you're looking about 384 shares. 384, right, times 140, or 137. Let's say that's our target, $7. Okay, so 384 times $7, $2,688, $2,680. So if I put down about, let's say, $600, and within a week my price target is $7, then I'm most likely looking at 200%. Okay, so 200% of 600 would be what, 1,200. So I'm making half the money, but I'm only risking $600. Okay, now if instead of putting down 50,000, I'm putting down 600. So that's the thing. That's how I play option. Like let's say I know that there's an opportunity, but I don't have the cash, or I'm not willing to put up that cash. I'd rather average down somewhere else or buy something else. Then that's how I play options. Just simple mathematics, okay? So I believe that Apple within, and we see this W and the flag, okay? And the flag could be said something like this, right? All right, W and the flag. If it breaks above the flag, I'm looking at, my target is 144.90, so 145. My target would be 137.95, let's say 138, within a week. Okay, but that all depends on because the earnings season came up, so and we just started May. You know, there's a saying, sell them may go away type of thing. And then the 15th is where the tax deadlines are. So I'm not sure this next week is going to be very interesting, because the technicals say something else, but you look at where, you know, some of the news and what, you know, other things are on the calendar, I have no clue. So this is my play. I did put my money, and it's on Twitter. I did say it, that I bought the weekly calls for 140. Of course, I'm not expecting it to go to 140. If it reaches nearly about 135, I'm probably going to make more than 100% on the money, so I'll take it. Not a lot, but I'll take it. At least I played and I got the opportunity. When I love it when I see an opportunity in the chart and I get it. If I see an opportunity in the chart and no matter how small the money is and I miss it, you know, it's like, you know, something is going to happen. You want to take an advantage of it, and this is one of the moments, which I believe that for Apple, that's what's going to happen. I believe that's what's going to happen. Okay. There it is. Okay. So that's the width, 23 bars, and I'm looking at about June 7th. So everything, even the QQQ, it's always pointing me out June 8th, June 7th. So by the time it's the first week of June, we're probably gonna, by the end of May, we're probably gonna have a bullish run on tech. That's what my expectation is. Okay. Next up is Amazon. I know Amazon had amazing earnings, and then look what happened. So it's kind of frustrating, and the Amazon chart has been frustrating for some time now. I've talked about this diamond formation, which is usually bearish, and it did get a support off of the previous lows right here, so that was good. But Amazon chart is on a trading range, so I'm just going to pull this out. Okay, and I'm going to draw two lines. Okay, you see this top and you see that top and the bottom. Let's pull the bottom from here. Okay, there you go. So it's a clear indication, and it's kind of, you know, up, down, up, down, up, down, up, down. And it could get a retest around right here, because this is where the midline is. I'm going to end the wave here. So I'll show you where the midline is, basically right here. Okay. Even here. Here's where the top's here. That's fine. I'm just going to pull up somewhere around, this is the mid. There you go. So I'm expecting Amazon, and you might say, why are you bearish on Amazon? I'm not bearish, but the chart looks like it's stuck on a huge range. Okay. Now I'll tell you what's going to happen though. Of course, two scenarios. I don't know exactly what's going to happen. Any kind of breakdown below this line, you're looking at 221s or 2200s. Anything above, let's copy this. Great, now it's upside down. Let's just redraw it. Okay. But you get the point. Anything breaking above this trading range, you are looking at 4,200. But it is so frustrating, and sometimes Amazon can do that here. Okay. And what happened is, here, I'll show you what happened. I'm just going to simply draw a box. You get a huge trading range here, right? Sometimes what it would do is it would break out. You're thinking, all right, this is it, and then bam, it'll take you down. So do not jump in the ship as soon as, because it could go up to 3,600 and then pull you back all the way to 29. Now this is, again, I'm not talking about days, I'm talking about months. Okay. So what might happen is you're gonna break out of this range and retest, and then finally break out. And this one lasted about, I could tell you, pretty long time. Nearly about, if we started from here, let's say, from 2019 of April, that's a year. That's a whole year. From 2020 of April. That's a whole, and I can understand why this crashed because of Corona. It might have been a breakout, a true breakout, but then the Corona news happened, so news does matter at times. But here we have a whole year as well. Well, not a whole year exactly, but from September 2020, now we're reaching April. And this can last another year around, let's say, a whole year would be September. So by the time looking at September, you can still trade in this range. And there are Fibonacci levels here within the box. Like the 3183 is going to be your mid-level. And I'd say like the lowest it would probably test would be 2800s for whatever reason. I mean, I don't think it would. It should fundamentally, but technically. So this is all you have for Amazon. I'm not giving targets because it's not a targetable action here. I can draw many extensions as you like. I have done a lot of extensions in this zone. I'm just gonna delete them because in the end it doesn't really matter. What I could do is a retracement from this top to this bottom, and you see how the 200 met up with our target. Okay, and then what you could also eventually do is do a retracement to the bottom. Okay, notice how the 200% came up with our target. So that's it, 200% extension above, 200% extension below. That's exactly how the math does work in this ticker for Amazon. Okay. All right, now having said that, I think we're going to move on to our next ticker, which is Facebook. So let's take a look at Facebook. For Facebook, had a spectacular earning. Facebook chart is a little more messier than other charts, I can tell you that. Let's take a look at weekly first. Let's take these out. Let's take these out. Because I like to zoom out at times where I need to make sure that, Correct. So now you see the line, right? Top, support, broke down this. So we have a major support around this $200 zone. And then the next one is bottom. So we have a major support around 175. And then we have the tops, right? Top, broke out, came back. Top, broke out. Now I am not sure if it's going to come back, but zooming out to the weekly chart, looks like Facebook is, and you guys now see how I'm coming up with things. Facebook is basically at a level where it actually is above on the megaphone. We can call this a megaphone. Okay. Now, what do we expect from Facebook? Well, one thing I can tell you for sure is that it's not on a bearish, like I can't tell you that it's going to break down and it's on a bearish phase. It broke above this major trend right here. Okay. All right. So that's a wedge. It broke out. Okay. Now, would it come back? I believe so. And where would be the levels? I believe I'm going to draw a couple. Oh, I didn't mean to draw this one. No, it's too long. I see a couple major supports, right? How do I couldn't get the horizontal line that I'm looking for. And when I do, it's going to be a ray, but let's do that. Yeah, that's better. And These are going to be your major supports. Now let's go on the daily chart and see what we drew. And that's why sometimes like my daily charts look so messy. It's because I zoom out for the weekly and then you're like, okay, what the heck is he doing? And then seeing this, it looks like bullish too. Maybe on the shorter frame side, on the 30 minute or the hourly, you're gonna be like, okay, even though the candle is red, it looks bullish because it, you know, it broke above this small flag it did. There's a major gap here after the earnings. First of all, I think that's gonna fill out and it's gonna happen to be about 310. If it comes to 310, it's good, but I don't see any. Like, I think the opportunity was in Facebook at 248s, 257s, okay? But I don't see an opportunity here. I see a more risk than more reward, okay? So, well, enough with the guesses. Let's talk about some of the math here. Technical math right here, okay? Upside will be 334. Resistance is going to be 327. Now let's go ahead and do one thing. Let's look at the downside of things. Okay, that's your downside. I drew an extension from the bottom of February to the top of after earnings, and that's where it comes up. Okay, that's just simple math. Okay, upside is more limited, downside is more. Therefore, I am not looking forward to risk money on Facebook at this moment. Short-term trading. Okay, not long-term, short-term. Okay, if you have a long-term fundamentals on Facebook, that's something else. You know, you're investing in Facebook. I'm talking about trading. Alright, so that's the channel for Facebook. It could basically bounce from 315 and try 358, but I don't think it's possible. Like, I think it's gonna pull back more. So you see this? Okay, right here. Okay. So if you're playing bullish on Facebook, I would say wait till 315 again to retest, and then play 350s. That would be the play. Okay, but if you auto zoom, it looks, you know, it looks a little distorted, but that's how the play is, and that's how it's been doing. But I don't see a major pull up like this for any, I don't know, any news event. I don't know, nothing with Facebook that I could think of. But I could say the safe buy zone would be 283. Next up is Google, so let's take a look at Google. I know people are gonna say, you know, Class A and blah blah blah. I did Class A. Don't worry about the other ones. There's always, you know, the Class C, I think they call it, the one without the L. So don't worry about that for now. Okay. Facebook chart and Google chart looks like, you know, it tore up. It really is on a bullish run. But the thing is, do we want to buy it at the top or do we want to buy it at the bottom? Clear indication of bounce at the cloud, bounce at the cloud. I just wait for another bounce off the cloud. If it goes, it goes. I don't really care at this moment. Again, I've been saying it since, you know, that after elections, you know, after Biden won, we had a huge frenzy of market going up, thinking that, and I kept telling you guys, wait till inauguration, market is probably going to pull back after inauguration, and it did. Yeah. So a lot of people were buying, you know, CCIVs at 50s and all these, like, you know, crazy things going on, and I said, you know, I could tell you technicals, but what I could tell you is I won't buy them if you ask me personally, and, you know, it's all about experience. So there you go. We have a couple support lines that we're going to go over with. Let's draw them very quickly, and these are specifically candle supports, not Fibonacci, but I did draw a Fibonacci from the last extension, and it hit the 100%, pulled back, bounced off of the 61.8, which is right here. Okay, comes back up. What if it goes to 2430? I would sell. On the longer term of events, it could go to 2700. But for now, I would buy, my buy zone would be 2200s, or even maybe 2100s. Not here. If it rips up, fine. Okay. If it rips up and you don't want to risk, like you're buying Google, cost of shares like 2300. I don't know what the option costs are, but I would definitely basically, if options are cheaper, I would play options, or you can do spreads. But having to nearly buy 10 shares would cost you $23,000. I don't know, unless you have like a huge fund, like $500,000, $1 million, or above. Then that's where you would invest in Google, thinking that, okay, I could sleep comfortable and it's not going to move anywhere, it's not going to crash. And look at it long run, right? Look at the long run. This is parabolic. I mean, insanely parabolic. It's monthly candle, by the way. Okay, this is parabolic. For Google to move from last March Corona crash from $1,000 to 2,400, that's parabolic. I wouldn't touch it, honestly, at this point. Now you're gonna say, what's gonna happen to Google? Is it gonna get bankrupt? No, but I'd look for a better value. Okay, I'd say the best value for Google at this point, and you're gonna say like, you're being cheap. That's fine. I mean, when you're buying things, you want to buy it at a value. Technically, I'm not talking about like swing trading, day trading here. When people buy Google, they're not day trading, okay? I mean, I don't know, if you are, you're at the wrong stock. It's pretty much a boring action if you're doing it, or you're just like buying, selling 2 million at a time. What I would say is the best value for Google at this point would be 1,700, and you're going to say, go to hell. That's not going to happen. And I don't care what you think. Okay, I'm just talking about technical. From last retracement from March to the top of the earning, I'd say that 1,700s would be my go-to value. Okay, so that's my Google analysis. I'd say the 2,400 is a major top. If it does pull up and continue its parabolic action, 2,700 would be my next target. But I think the risk reward is not there for me. Next up is Netflix. Now I know that Roku had a great earning. Whoa, what is this yellow line? Let's delete it. And this is monthly. Sometimes it's better to look at monthly, and you see like clear indication of trading zone right here. Okay. Let's go ahead and pull the thing back to daily. Look at the trading zone. Okay. You're looking at about 19% upside move if it breaks above the trading zone. Okay, that's all I gotta tell you. But is it a good investment at this point when it has competition? Honestly, I can't remember. I have Netflix because of T-Mobile. T-Mobile is like paying basically more than half the money. It's like it's worth like $19, $20. I'm only paying like $7. So that's all I gotta say. Like a lot of people use it for free. Netflix needs to resolve account sharing. And now we're diving into fundamentals. How many of you guys have, be honest, people do share, I'm not gonna hear your voices, but just ask yourself, how many people do you know that actually share their Netflix accounts from one another? Honestly, the other day, I don't know how this happened, somebody got, and I don't really share it, it's just my brother and I were using it, must have been his friends took his password. I don't know what happened, but I saw a login at Spain. and I immediately changed my password. One good thing about Netflix is it'll tell you exactly who signed in at what location, and I immediately changed my password. Okay. So having said that, that's the fundamental side. Let's cut the crap and talk about the technical side of things. Okay, that's one thing. Here you see a trend line. It broke above, came back. Now it's a resistance. It's below the cloud. Okay. I would not, now it does have a support right here. Okay. I would not swing trade this because I don't see a potential upside from 500. I'd say like 530. So you're looking at $30. You buy 10,000, maybe 20 shares, and you make $10 a share. You do the math. $10 times 20. And this is what I'm talking about when I get into options, is because I rather, instead of investing $10,000 to Netflix at 500, I rather invest about $600, give or take, because that's what I'm willing to lose on this trade if I were to buy the regular common stock for $10,000, and you're willing to lose 500 or 600. Just invest that willing to lose money in a stock like this because it's so expensive, and then at one point it doesn't really, it's been stuck, just like Amazon. It's been stuck in this range, and we could pull down this range because we did draw it on the monthly. We could do it right here. That would be better. Okay, and we could pull this up and say right here, and let's redraw it. Even now the upside is less now. We're looking at 21%. I mean, it's not, if it breaks above, so if it breaks above 570, you're looking around like 17%. You're looking at around 17% move. So that would be upside around 680s. Okay. And if you want me to draw an extension, this would be a better extension. Oh, that's a retracement. Let's do an extension. I didn't like the way this extension worked. One second. Let's do one more thing. Sometimes I draw an extension, I don't like it because it doesn't. You're never gonna get it right the first time. Most of my drawings, it looks like I'm doing it the first time and it happens to be correct. It's because of all the experience and all the extensions that I've been doing when I'm drawing charts. Yeah, I don't really see an extent. Maybe let's do a shorter term. Let's do this extension and see what happens. Yeah, this is more reasonable. Yeah. All right. So again, it's kind of matching up with where we're targeting. I would say if you're trading Netflix, remember I said you were looking at $30. That's your range right here. Competition is rising with Netflix. You have Fubo, you have Roku, you have Amazon, you have Disney. There are other services, IPTVs. I don't know, all the services, but Netflix originals, Netflix content. Do they beat it? I don't know. Amazon is pulling up great shows and movies too. So, and it comes free with Prime. Let's see. This one I'm not really favoring. So out of all the FAANG stocks today, what we reviewed, I believe Apple has the best chart out of all and the best potential. We're looking around 14 to 15% move within a month. With the other charts, we're always talking about if this happens, there's no value, it's too high, it's too slow. Apple, on the other hand, is ready to go, and the time frame between that is much shorter. And also, since there has been a split for Apple, the shares are cheaper. So you're looking at more people playing, more people trading it. Besides from that, this is my conclusion. It's been an hour with all the ETFs, the major ETFs, the market ETFs, and the FAANG stocks. I hope you enjoyed it. If you did like our content, give us a follow, give us a like. And also, I also like to mention that when we do video analysis, if you go to the actual YouTube channel or the YouTube app, I always put timestamps. Okay, so whatever you're interested in, you can click on it, and it'll go ahead and jump just right in that second. Okay, so that's all my conclusion for today. I hope you enjoyed the video. Give us a like, give us a subscribe to us, and we'll see you guys next week on our analysis.